morning everybody, this is Vasilis Girasis for ntmarkets.com. The graphs we're going to look at today are all offshore graphs, so for the traders out there that are specifically looking or rather follow the international indices or equities, and especially in the UK, this is probably for you guys. So the first graph we're going to look at is Matthey. Nice little triangle formation over here, the range becoming more and more narrowed. We're looking for a breakout either to the upside or a possible breakout to the downside. Either way though, a break above or down would actually initiate a pretty high probability trade. So just looking at the graph over here, strategy on this one would be to possibly go long on a break above 23.50. As always, we prefer to wait for the breakout. We then want the share to come back and retest that breakout level to confirm the breakout and then look to go long. But for the guys that want to take a bit of a risk and a bit of a punt on this one, go long at a break above 23.50 with a stop loss of 23. Our target price on this trade would be 24.50 and then possibly even 25.50 to the upside. As an alternative strategy, should it break the triangle pattern to the downside, we would look to go short on a break below 22.50. Our stop loss on the short would be 23 with an extreme target of possibly 21.50 to the downside. Next graph I want to look at is Marks and Spencer. Marks and Spencer, as we can see here, a little bit range bound between 360 and 400. We can see that it is trading in a bit of a range over the last 5-6 months or so, but it does have that horizontal support that we are nearing at the bottom. So our trade on Marks and Spencer would be to go long on a break above 373. Our stop loss on this trade would be 365 with a target price of about 390 to the upside. As an alternative strategy, look to go long at 360, which is at the bottom of the range, with a stop at about 355, and again the target would be 390, which once again is near the top of that range. And lastly, I know miners have not been quite in favor recently, but Rio Tinto I think is also looking quite interesting. We do have that horizontal line of support at 33. As we can see, going back to September, October, November, it was actually quite a strong line of resistance. As we can see by the three circles, they tested that level, couldn't quite make it, eventually broke out through December, and going forward into 2013 we saw that it did actually retest that level, and that line of resistance actually became support, and we seem to be at the bottom of that range again. So our trade on Rio Tinto would be to go long at 33.10, a stop loss in place of about 32.80 with a target price of about 36.50 to the upside. This is Vasilis Girasis for ntmarkets.com.